Yes, yeah, this is like an XAUG back in this video with you. Like an XAUG back in this video with you. So we are going to make some analysis on this pair of Euro USD. Yeah, we are gonna see how to capture. We are gonna make some recaps on how you could have captured some moves here on this market trend. So as we will see here, the market is in an uptrend. It's making higher lows and higher highs. It is making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Just that the market on a monthly chart where we are, it cannot show us those higher highs and higher lows, but we see it's in an uptrend as we see. So what I can do here, well, I will know now that Euro USD is in an uptrend, or Euro is stronger than dollar right now. So I have to focus on uptrend moves, okay, or uptrend, or focus on areas of liquidity of uptrend. This is an area of liquidity, as you see. What I mean by an area of liquidity, the market forms this higher high, it forms this point, and then it breaks this previous higher high. Higher high, higher low, higher high. Okay, that is an area of liquidity. From this point to this point, then they make this high here. So this area in between here, that is the area we mostly focus on. Okay, so let us dive in. So according to this monthly, we don't see that area of liquidity. We don't see it. So which time frame will give us that area of liquidity in line with this monthly uptrend? Yeah, let us now drop deeper to weekly chart to see if that weekly chart gives us that area of liquidity. So when we drop to weekly, wow, we see that weekly has many structures it formed, and when we see properly, yes, we can see that area of liquidity. Can you see it here? We had not broken yet properly with candle closures. So we are gonna make a recap on the previous area of liquidity that we had here. Okay, I hope you can see it. I hope you can see it. That high, this low, they brought to that high. Okay, so we're going to focus on this area of liquidity of weekly, because we well know that monthly is in an uptrend, and now we have got an area of liquidity in weekly in line with the trend of monthly, meaning that we are supposed to be on a buyer side or bullish side. Okay, we are supposed to follow the bullish trend. That's what it means. We are supposed to follow the bullish trend. Okay, so now when we come here in weekly, true, we have got that area of liquidity. I have told you how we label the area of liquidity. The high we had, it is this one. This is the high. The market made this high, it made this low, it made this higher high. So we are supposed to focus in this area for the entries, just that the market never came back in these areas. But I'm gonna show you how we can still get trades even though the market doesn't come back in between the high and the low, which was broken by this higher high. Okay, yeah, so we label even that low, plus our high including. So I want you to imagine that this move was not yet here yet. Okay, that move wasn't there yet. I want you to see the chart when that move is not there yet, like that. Okay, so that is the area of liquidity. I mean higher high, higher low, higher high. So they have broken this one. So I'm supposed to focus in this area, just that the market never came back there. Okay, so I want to see now if I get my area of liquidity in weekly, what am I supposed to do? Now I will know that we have the signal that we might have some buys, because an area of liquidity gives us a signal that we might be buyers in the market. So after receiving my area of liquidity in weekly, that's a signal to me. So now I have to find the time frames in line with my weekly bias. So I have to drop 2 time frames lower than weekly, but we are near with the weekly 2 time frames lower than weekly chart. So how many time frames are lower than the weekly chart? We have 2 time frames lower than the weekly chart. We have the daily time frame. We also have the 4-hour time frame, as you can well see there. We have the daily time frame, or the 1 day, and we also have the H4 time frame. So when we shift to daily, what do I want to see in daily? Okay, let me show it to you faster. What I want to see in daily, those are shifts. I will know that we had this area of liquidity. So meaning that weekly is buying. So in the market retracing like this, if I receive a shift in daily, 2 time frames lower than weekly, if I receive a shift in daily or a shift in H4 in line with the weekly uptrend and the monthly uptrend and the weekly and the monthly, if I receive a shift in those time frames lower than weekly, and which are daily and H4. So if I receive a shift, which shift am I meaning? A shift in line with weekly. It means that the shift must be supporting our buyer side. So the shift must be like this. Okay? That is the shift I'm supposed to look for. Types of shifts. We have many types of shifts, but maybe I will just record another video for that one. I won't explain shifts right now. But some shifts have inside formations. Other shifts have outside and inside. This one and this one. And some shifts have only outside formation. So here I'm going to look for that shift in daily or H4, showing to us that now the market in lower time frames, it is with the bias of monthly and weekly. Okay, so now let us dive deeper in daily. After diving deeper in daily, so as you see, that was the retracement I told you about. So now we are supposed to wait for, if you remember, yes, we are supposed to wait for that shift. We are supposed to wait for that what? For that shift. Just that this broker Xness, its candles were kind of not well printed. But if you have some experience in the market, you can see that you have something hidden here. Okay, you can see something hidden here. I think this gap was caused by these weekends, whereby the market just opened. So we have the shift here in these points. Exactly here on this high, we have the shift. Let me label. Yes, the market shifted from there. Let me draw for you this structure. The market came down like this. It made this high, it made this low, then it shifted. Are you seeing that? But it shifted with an inside formation. Which inside formation? Okay, let me first remove this guy. Okay, the market made this low, they made this high, they made this lower low, and the market made this inside formation before shifting. That is the inside formation I mean. The market normally makes that one, then it shifts. This guy is here, from this high to this low. That is the guy, this one. Okay, so now I'm going to focus more on that what? On that inside formation, which is this one, this guy. So now I know that daily is supporting our trend from this side because it has shifted in line with the monthly, in line with the weekly. Okay, so meaning that we must supposed to target this high of what? Weekly. We can use daily here and H4 to target this high of what? Weekly. Because we will know that the market is in an uptrend. We are supposed to be in a bullish trend. But before shifting there, I want us to check H4 if it shifted. Because remember, this price action was not yet there. According to the recap we are making, I want you to imagine like that. Okay? The next video we shall shape it very well. So, I want us to check H4. To check H4 to see if we had a shift in H4 at that low. Okay, this is H4. Yes, H4 also had a shift. We had a shift with two inside formations. With time, you will get to see those stuff. You'll get to see those areas very well, but it's not well clear. It's not well clear. So I will focus on daily. The shift I mean, it is here. This is low, this is the high, this is the low, and this inside formation, including this inside formation, then we shifted, we broke this level. These are the two inside formations I mean. Okay? Yes. So let us shift back to daily because it has given us a nice shift with smaller areas where we can focus on, because this one is kind of confusing. I might take on the first area of liquidity, which is this one, and they weak us out, or they take us out and the market respects this one. So to avoid that, I will focus more on daily time frame. I will focus more on daily because it has given us small structures. So here on daily, I'm going to focus on the area of liquidity. Should I remove no, let me get the other ones. I will focus more on daily. Daily, I'm labeling the inside formation, the ones I've explained to you. Yes, they are the ones I'm labeling. So don't wonder where am I labeling. Don't wonder where am I labeling. I'm labeling the inside formation from this high to this low, then we shifted. The market did this, it made this low, it made this high, it made this low, it made this inside formation before shifting. So now I'm going to focus on this what? On this area of liquidity. Now which time frame is in control? It is what? It is daily because it has recently broke structure and it is in line with the monthly and it is in line with the weekly and it is in line with the uptrend of the market. So now which time frame is in control? It is what? It is daily. So two time frames lower than daily, we have H4 and we have H1, two time frames lower than what? Than daily. So we are going to focus on two time frames lower than daily, which is H4 and H1, to see if we can get setups that can support our bias to the upside. To the what? To the upside. So right now I'm going to focus on what? I'm going to focus on daily. Now H4. Let me first label this low to avoid over confusion. I'm going to focus on H4 or H1 to see if we had that shift. inside that area. Yes. So I want us to see the market as this. So now you have come in that market. Yes, you wanted to see a shift. Okay. So because this was the inside formation, that was the inside formation. So we wanted the market to come back in this area to see if we can have that shift of H4 or H1. And we see that the market has entered that area, and after the market entering that area, it has made for us that shift in what? In H4. Okay? Yes, it has made for us that what? That shift in H4. But yes, I see that shift. But what is H1 saying? Because most times H1 can have that shift for us faster, and it gives us where we can take entries from. And you can wait for H4. Remember H4, its structure forms each candle in H4 forms for 4 hours, but 1 hour candles they form in 1 hour. So 1 hour chart can form structures faster than H4, and it can give us setups faster than H4. So to avoid over confusion, you can first shift even in H1 to see what H1 is trying to talk or speak to us or show to us. So when I shift to H4 to see what H4 is trying to tell us, H1, when I shift to H1 to see what H1 is talking, yeah, I can see that yes, we had that shift with 2 inside formations, then we shifted. With time, you will see those inside formations. We have this one and this one. Yes, the shift is there. Okay, that is the shift. So now, here, true, the market never came back in in this H4 for the setups, but true we had the setups there. Let me keep this one low. We had these 2 inside formations. We had this type 5 here, we also had this type 5 here. Now some people are asking what are the types I am meaning. We shall explain that to you, my people. So okay, according to these areas of liquidity, I see you have a type 5 here and a type 5 here. So now I can focus more on the first one because it's an inside formation. If they take me out, I will focus on the second one. But I will know that the market never came back there. The market just what? Shifted. Because why did the market just shift? The market made this outside formation in what? In H4, and I could focus on that one. Why am I saying so? I wanted to wait for the market. If the market did this with an inside formation, I would have focused on that one. But the market instead, it just made the outside, it broke this high and it made this another what? Area of liquidity. So I had to focus on this one. In H4, even though that the H1, we had these areas already here, we are seeing here, but the market never came back there because the H4, it shifted and it made for us that what? That outside formation. Okay? So now we shall shift back to H4. Because H4 did for us something one could have missed. But us, we have not missed it. We have seen it. Okay? So this is the shift. Which time frame is that one? H4. Okay. This is useless. It was H1. So H4 has shifted, as you see. H4 has shifted, as you see. From where? They made this one, they made this high, they made this low, and the market has shifted from here. It has broken that high, and it has made this outside formation. So now I can focus on this outside formation for entries. But this outside formation, I see it already has this type 5 here. It already has this type 5 candle here. The inside formation already has some inside formations also. So now I will focus more on this what? Type 5. Yeah, it's kind of confusing, my people. But with time, I will make some videos explaining what are type 5s. Now I think I can even use this one because they no longer have use that side down there. Yeah, so that is the area of liquidity I have right now. But I have the inside formation. I have that inside formation. Oh, I have type 5, which is what? Which is this one. Which is, this is the low, this is the high. We made that outside, we made that area of liquidity complete. But we shifted with these areas, these areas. Let me put it in line chart for you to see the areas I'm trying to mean. Are you seeing these curved areas? So that those are the areas I'm meaning. We made this high, we made this low, we made this one, the inside formation, we made this inside formation, then the market shifted up. Okay, so those are the areas I'm trying to mean. Okay, when I shift back to candle, so I will want to label the low of the type 5 or the inside formation. I make that one, I think, a red line to avoid over confusion with the area we have received recently of H4. So now what am I supposed to do? If I receive that area inside the H4 area of zone, so now I will just look for liquidity engineering. Yes, that's it, liquidity engineering. And which time frames are lower than H4? Two time frames lower than H4. We have M30. No, we have H4 and we have M30. So we are going to look for liquidity engineering in that zone. We are going to look for liquidity engineering in this zone. This is the zone. This is the area we labeled over H4 inside formation. So are we seeing any liquidity engineering there? No, in H4, no, we don't have. What of M30? M30. Let us see M30. M30 do we have? Yes, M30 we have. This is the someone might call it a Quasimodo. High, low, higher high. Then the market broke here, it came back here, it went up. So this is an entry. This is an entry zone, and we are in 30 minutes. But I can want to refine more deeper to receive that small stop loss. Okay, because some people the stop loss might not be favoring, but it's a nice stop loss, you can use it. Still also, let us see the pips. 14 pips, 13 pips, wow, you can use this one. But if you can want to refine more deeper, two time frames lower than what? M30, we have what? We have M15 and M5. So you can refine to M15 or M5 to receive that smaller Quasimodo or to receive that smaller liquidity engineering below. So it is here. This is the level I'm focusing more about. This low, this high, they broke it. The market shifted this level. And I can still more refine more deeper in M5 to receive that tighter one. If I'm but remember, over precision it can lead to mixed emotions and you can lose some trades because of over refining. Over refining is not good. Because of over refining you can end up missing what? Setups. So according to this, let me first remove these guys disturbing me. I get another one. So according to this, yes, we can see M5 has given us its liquidity from here. We made this low, we made this high, we made this break of structure from here. So that's a level I can focus on for the what? For entries. So I can focus for entries, for my entries to be on that line. My stop loss just below on this yellow line. How many pips do I have down there? I have 9 pips. 9 pips on this to the stop loss. Now I can target only the other high of weekly we last saw in the weekly area of liquidity. I can focus there. Okay, yes, and also I can wait for other formations if there are other formations to be formed. So my entry is supposed to be there. And wow, you see how the market this is how the market reached our zone. Are you seeing? Super entries, super. sniper entries. Here we had another setup. We had another setup. H4 failed to break, and we had another entry in that zone. Here, let me try to show it to you here. Let me try to show it to you here. Yes. We failed to have H4. What is this thing trying to do? It is disturbing me. Okay, H4 failed to break here, and we had some entries here. I know how we can get that one, so you can use this video exactly to see how you could get this entry. Let me show you to you where it came from. But remember, this is our bias. We have bought from there. So let me show you to you what I mean. The other setup we had. Yes, we see that the market bought. This is the structure I'm trying to show you. The H4 failed to break, but if H4 fails to break, we will know that now the time frame lower it has already broken, which is what which is H1. H1 means that H1 it has already broken. Let me first show you that move from our entry to our TP. Yes, can you see that we bought to our TP? Yes, but before reaching our TP, we had another move there. So let me make it faster because I don't want to make this video a long one. We will see that we had that sniper entry from down there. They never even reached our stop loss where it is. So I'm going to delete this one to see how we can capture even this second one. Faster. I'm not going to over explain because the video is already heading into 30 minutes. So this is the low I'm focusing about. We had there the H4 had already made for us its high. It broke with that level. This is the higher, meaning we have this one. H4 tried to break, but it failed. So after seeing this, H4 left for us a wick there. A wick, meaning now the time frame lower, it has already made its structure there, and which is H4. So after focusing on H1 I mean, after focusing on H1, because H4 has failed to break for us above, so meaning that H1 it has already made for us its outside break, because it's a time frame lower than what? It's a time frame lower than H4. So let me just label that low for easy identification. So this area, it is the one for 1 hour. Remember, H4 failed to make candles close from above, but you see that H1 it has gave us those close-up candles from where? Above. This is the high of H4, and we see that H1 it has already broke structure. We have not that area of liquidity. Now we are going to look for liquidity engineering just below. We're going to look for liquidity engineering just below here. So for all Quasimodo, for those people who use Quasimodo, you can find your entries here, or those people who are going to use liquidity engineering. And liquidity engineering, I will want to use that level, this one, Quasimodo, you can see it very well, with a proper break of structure. So some people might have had some confusions here. Some people would have went with this area, but this area is so wrong. This area is so wrong because someone might say that this is a proper candle formation, but you don't see where this wick came from. We had this low, we had this high, but this low was over pushed downside, and it covered all this part, and these are kind of just inside formations, and the market swept here, the liquidity from here. So where did this low come from? It came from where? This is the level we can focus on. So that is the level I will focus on for my entries. Now I can delete this one. Yes. So after receiving that Quasimodo or liquidity engineering, I know that now the stop loss is big. So in refining, I told you now I'm supposed to scale down. You're supposed to scale down. Let us see, 30, 30, 30, 30, 20, 25, it's big. So to reduce the stop loss level, we shall shift down to lower time frames. To lower time frames, okay. I see this is the level I'm focusing on, the Quas model. That is the level I'm focusing on. This one, that is the level I'm focusing on. That is the level, that one, to see if I can shift more to M15 to see if we had it some low, if it went some lower. If it went some low, yes, I can see. Are you seeing? So now I think I can take my entry from there. I will not want to, can more refine, but as I told you, over refining, it's not good. Let us see the stop loss pips we have. We have 22. We can go with that one. Yes, we can go with that one. Or I'll just take this one as an aggressive trade. I will have my stop loss just beneath this level. I will have my stop loss just beneath. Let me make this one. Let me make this one. Purple one. Okay, that is my stop loss. Okay, so my entry is yellow. My entry zone is yellow. My stop loss is purple. Yeah, my stop loss is purple. So I'm supposed to buy from there. My stop loss just below there. Even though the good stop loss are supposed to be below that level below here. So this is just an aggressive trade. It is aggressive. Yeah. So let us see how the market played us out in H4. Let us see in H4. Wow, I've moved the entry. I've moved the entry. Let me first replace it back. This is H4. Okay, let us see. Wow. Are you seeing, guys? Are you seeing magic? This is the entry. That is the entry. Snipers, guys. They're receiving snipers. This was the extreme low where we could have the nice stop loss, but I never used that one. I used that purple one. And we bought from that yellow line. We bought from that yellow line. The stop loss is supposed to be this purple one. We bought from that yellow line. Now we can target the weekly level or the weekly high, which was already hit. So those are two entries, swing entries we had it there, which was already what? Hit. Which was already hit with super nice moves, entries. Yes. As you see. So I close up like an XA UJ.